My first question is, Z has no oil production assets upstream, so how does that shape your strategy downstream into the market?
Yeah, a really great place to start. So back in 2010, when we first came together as a company, we looked at what was different about us by being in the hands of local shareholders, by not being tied to a global agenda, and as you pointed out, not having any interest in the upstream. So because we don't invest billions of dollars like our major competitors did in exploring for oil and gas, we are actually not tied to a future that says we have to monetize those billions of dollars worth of investment. So that's the first thing. We're a transport energy company and we'll sell the most economic and sustainable transport energy that we can. Then the second thing was, and I think the global financial crisis got in the way of this, and I think momentum is now returning, that actually a lot of people are saying, well, actually, big companies should do something about this in terms of environmental, social, and for us as a company, economic sustainability. So what we did, we actually asked all of the people who worked for us at the time, and we said, well, actually, what do you want to do about this stuff? If our paradigm is we don't have to sell oil and gas because we don't invest in the upstream, what do you want to do? And all of our folks overwhelmingly said, we want to move from being in the middle of the problem to being at the heart of the solution. So this has been a pretty strong commitment for Z from way back in 2010, enabled by our circumstances, but equally reflecting the wishes of our people.
What sort of response do you get from your old colleagues at BP and other oil companies?
I think what's happened in the big oil world is they have moved progressively away from big investments when oil sort of came down from its recent highs of $120 down to something in the 30s. Now, I've read as recently as last week that Shell have declared that they regret not investing in wind technology or moving away from wind technology about 6 to 8 years ago, and now they're reinvesting. So I think some of the larger companies are certainly starting to get a sense that our shareholders are putting us under pressure from this perspective, and most importantly, our customers are saying to us, well, what's your alternative?
Given international oil prices are likely to remain low, have we seen the end of big offshore oil exploration in New Zealand?
I think your point's very well made. In a world where oil prices are low, New Zealand is a tricky place to explore and develop because it's not necessarily as proven, like say Saudi Arabia, where you could almost put a straw in the ground and you're guaranteed to get oil. And it's a long way away from other markets and would require probably quite a lot of infrastructure to be able to take whatever we find and move it to a market. New Zealand itself, unless it's gas, is highly unlikely to use all of the crude that we would produce because we're not a large consumer of crude in a global context.
In that case, would this be an appropriate time for the government to draw a line under its big push on oil and gas exploration, particularly deep offshore, and say that this is a country instead that's committed to 21st century energy, i.e. renewables?
So I don't think it's up to me to tell the government how to do things, but what I would do is encourage them into thinking on a broader basis. And I think New Zealand in some respects is blessed, probably more blessed, with the things that would go into alternatives. We have quite a lot of natural feedstocks, whether it's wood waste or tallow or wind, that actually is able to be used in these low carbon alternatives.
Although we have a very high level of renewable electricity, 85% heading to 100, our carbon intensity as an economy is no different from the OECD average. In other words, we've squandered that opportunity.
I think in New Zealand we often forget, because things are so good here relative to other parts of the world. Our environment is cleaner, it's an easier place to get around, we don't have the population intensity and all the consequences that come from that. So I think it's easy for us to fool ourselves into thinking we don't have to do anything about this. I'm always struck by the statistic that said, New Zealand is only 0.16% of the problem, if you like, so why should we bother? I think what often gets forgotten is if you added up all the small countries who could say to themselves, why should we bother? That adds up to something like 30 to 40% of the total global problem. So each small country, along with each large country, needs to do what is appropriate and relative to its own performance. And the second thing I'd say, I spent a lot of time overseas, New Zealand is but a village, and I mean that in a very complimentary way. So we can do things in New Zealand at a pace, with innovation and taking a reasonable amount of risk because we're all in the little village together. And I think that's something we don't take advantage of in the context that we live in.
So as you look across the transport sector, what gives you encouragement about where we are making progress on this very difficult shift away from oil as a main fuel source?
So I think first of all, companies who use the product are actually committed to doing something about it. They've got their own sustainability agendas, or they have their own ways of demonstrating their commitment to the Paris Agreement. So at the very least, we can become more efficient. So forget about the alternatives, but I think companies are focusing a lot more on how they can efficiently use something that is damaging the environment. So if we can find ways to drive better, to consume less, by using GPS type technologies for companies to, if you like, from a trucking perspective, route their deliveries in a more efficient way. I think there's ways we can use digital technology to become more efficient in our use of fossil fuels. And then clearly the big elephant in the room is actually how do we replace fossil fuels with something that is better for the environment, better for the social outcomes that we're committed to, and we have to meet that real big hairy challenge of actually how do we make it economic to do that, because many of these alternatives sometimes come at a massive premium or sometimes at a slight premium, which is an example that we've got. We know, again, based on evidence and some digital solutions that we have in place, that if people drove better, we'd end up with lower fuel consumption that would be more than the offset of an increased carbon price. And what do you know, we get these other externality type benefits where we'd have safer roads. So yeah, we've got some really good evidence to say we can help people moderate their driving behaviour in a way that reduces their consumption such they could afford to pay more per unit, and we get some really great environmental and social outcomes.
But is it counterintuitive for you to ask your customers to use less of your product?
Well, first of all, we just be straight up about it. We say to people we have a policy around this, our sustainability policy that we documented in 2010. We've worked really hard to tidy up our own backyard. I don't think we can go out there to our customers and suggest ways for them to make progress on sustainability in the environment if we are busy polluting in our own backyard, if we're not managing our own waste issues correctly, etc. So we've done quite a lot to tidy up our own backyard in the last 3 to 5 years to give ourselves, I think, credibility to go to customers and talk about it. And when we go to them, we make it pretty clear, because as a public company, a lot of our financial results are public. So our post-tax profit per litre is about 4.5 cents per litre. So we don't if we sold 20% less of our products, yes, that would sound like a terrible thing on the face of it, but if our margin on a unit basis went up slightly, we could end up in the same financial position. So this doesn't have to be a situation where we lose by selling less.
Have you successfully had that conversation with some major users of your fuels?
Yes, we have. We've been very, very well supported on our biodiesel plant that we're currently commissioning. It'll come into the marketplace in March, April, May of this year. And we go to the likes of Fonterra, Fulton Hogan, and we've said to them, actually, we've got an alternative that will help lower your use or your carbon intensity of the use of our products, and we'd like maybe a couple of cents a litre more for that. And they've said, yeah, we'll support you on that. In actual fact, if companies like that hadn't given us that support, we would have been probably not making the $26 million investment that we did.
But can you scale up this biofuel technology so it makes a big impact in the diesel market?
Yeah, absolutely right. So we spent $26 million to get to step one, and we're going to use about 14,000 tonnes of tallow a year. The total market in New Zealand is about 160,000 tonnes, so just under 10%. We can double the size of the plant here in Auckland for about another $4 million. So the next tranche of capital actually is very, very effective for us to get to if we're well supported by the market. We then could look at building other plants elsewhere in New Zealand, because even if we double the size of the plant, we're still using less than a quarter of New Zealand's total tallow production. And I should point out that the tallow production isn't used elsewhere in New Zealand. This is not about disturbing the food chain. This product then gets packaged up in New Zealand, put on ships, and then exported overseas. So we take a byproduct in New Zealand that's pretty well a waste, and then we create more carbon by shipping it to another market overseas where it gets turned into something else like candles or soap products. So yeah, there's more of a closed loop opportunity here for New Zealand as well.
What are some of the other policy proposals that you think would make sense to the government and you would urge them to consider?
So the one that sort of rankles me up a little bit at the moment is that there are no incentives to provide biodiesel in this country. And I understand that, and in many respects I'm okay with that. What I'm not okay with is actually there are tax exemptions by blending ethanol into petrol. So we end up in this really weird situation where I've got an incentive not to invest in biodiesel in New Zealand, but I do have an incentive to import ethanol from a foreign market and blend it into a petrol here. So it may make me look like I'm more green, or I could claim some benefits in the eyes of the consumer from that, but actually from that closed loop perspective, it's kind of dumb, because I'm throwing off carbon to import a low carbon alternative into New Zealand, and the government won't be collecting taxes on something which then ends up as a bust for them. So you look for consistency in two ways, over time and between the different policies that governments enact.
Are there any other policy changes you'd like to see?
Yeah, I think we'd be looking for Well, I put it this way, that the government has signed up to a Paris commitment, and we all applaud that. We've recently been invited to provide submissions into the Energy Conservation Authority's strategy. And we've gone back and we've been relatively critical. We've gone back and said, nice document, but it's missing two things. First of all, it doesn't really link to what the government signed up for in Paris, so there's no direct sort of cause and effect. We can't be assured as a stakeholder that their strategy will actually help deliver the commitment. And secondly, the strategy is absent targets. So sort of like a doubling up of things. So that would be my, if I had a push to the government as well, is not just policy certainty, but we need to have a plan in a way that we know what the big goal is, we know what the steps are to take us there, we know how we measure those steps, we build in contingency because not everything always goes our way, and then everybody knows the game that we're playing collectively in the, as I said earlier, the village of New Zealand.
But what do you make of customers like my wife and myself? Last year we drove 20,000 kilometres between the two cars, and we did that on 3 tanks of petrol. I think we spent more money on car washes and coffees at Z than on petrol.
Well, great. We love all customers, so it's good to have you coming to us for car washes and coffees. I think this is just the changing nature of the marketplace, and as I mentioned earlier, we've got to build a company that's resilient to the threats and is able to embrace the opportunities that come from that. So we've already done some work, and we've published it actually, around how we see fossil fuel demand or the energy mix in the transport sector in New Zealand working through to the period of, well, we've published up to 2030, but we've done the work up till 2050. So we sort of know what's coming. Now, we don't know what's coming in an absolute sense. We've done some scenario work. So we said the answer probably lies between 2 scenarios, and this is pretty rigorous work following a structure that was provided to us by the World Energy Council and then the Business Energy Council here in New Zealand. So people like you, I guess I'd call you an early adopter, Rod, and I think that's really, really good. And we get to learn something about how you behave and how you work that will enable us to better manage the risks and the opportunities when this becomes a issue of much greater scale. You're one of sort of 2,000 electric vehicle users in New Zealand today. What's the market like when there's sort of 1.5 million or 2 million of those types of vehicles?
The government has just launched an inquiry into prices at the pump. What do you expect to come out of this?
I think it's understandable that New Zealanders have some real questions in this regard, and I'm going to be very careful about the comments I make, given that my competitors might hear what I have to say. So I think the first thing is that Zed's pretty confident about the outcomes of the review in the sense that our financial performance is already publicly disclosed. So we know how profitable we are, we know what our returns on capital are, and the whole market knows that. So we don't think that there's anything about our profits or our returns that are actually excessive. Then you do get into some tricky space around pricing around the country and the diversity of all of that. Now, I would argue in one sense, and you'd expect this from me, that that's markets working. I think it's really important that we reflect upon the Commerce Commission when they reviewed Zed's application to buy Chevron New Zealand. They thoroughly examined many aspects of this. So that material, and we've committed this to the government, that we'll make all of that available, and we'll provide them with the detail or to point them in the right direction, because as you can imagine there's quite a mound of material that's there. So the Commerce Commission have satisfied themselves, and I think that's where it gets tricky, as you mentioned. We can put financial data up that show that we're not earning excessive returns nor are our profits excessive, but then you do get into questions around, well then, if that's true, how the heck can prices be 10, 20, 30 cents a litre, sometimes variant across different regions, or even within a particular region, a market like Auckland, how can prices differ so much?
The Commerce Commission decision was split, though, 2-1, so there was a dissenting commissioner, and she said that there were real questions about how those market dynamics were working. One of the very interesting examples, of course, is what happens to prices when Gull is in a local market. How does the industry explain that there is that big price differential when an aggressive small player like Gull is in a locality?
Yeah, so I can only speak for my company. I won't make a comment on behalf of the industry. So there are 16 brands in the retail space, and I think this is part of the round the houses that you talked about, is when you drop down into our level of detail, it very quickly explodes. So there's 16 retail brands in the marketplace. 15% of the total retail sales or service station sales in New Zealand are in the hands of Gull and a number of other smaller players. So it's not like it's only Gull, and Gull are only a small proportion. I think the Gull effect is certainly there. There are equally people who operate like Gull in the South Island, for example, who do have prices that are perhaps 10 or 20 cents a litre different to what Z might sell for in a given market, even in an urban area like Christchurch. the offers are completely different. And I think it's a good sign of competition that some customers will be attracted to a low-cost offer in a very, very no-frills way, and there'll be others that would prefer something where they're happy to pay a premium on the fuel, but their busy day is made more efficient because they're able to grab a cup of coffee, feed the kids on the way to footy practice or on some other after-school event. So there is a real mix there. There are more service stations in the hands of these independent 13 brands that I mentioned than the people we typically think about as being that industry. So I think that's a really important point, is the pricing is done by, more than ever, by mums and dads running their own independent businesses, even if they do have a major brand out front. And these 13 brands now account for 15% of the market, and it's growing. And there's real great diversity of pricing. And there's a whole lot of stuff that happens on the price board as well as post-price board offers.
So who are the independents buying the fuel from?
Yeah, they are buying through one of the major companies' supply chains, and they happen to have either a different operating overhead, or they have a different commitment in terms of how they deliver the offer, or they only deal with the offer with the customer, for example. They're not doing things like Z is around sustainability for the environment, around making an impact around our community. I can tell you that if Z chose to focus on its most profitable markets, we could sell fuel cheaper. But I'm not sure that would really serve the people across the country when we only chose to operate in, say, the markets where we've got real scale, or that are our lowest cost markets to operate from a supply chain perspective. So we're a national player, so we've got a different approach to how we deal with the market than, say, someone like Gull or one of these other brands that are much more regionally focused.